All right, everybody, welcome back to another video here on Financial Friends. Today, you have tuned into an episode of The Dividend Journey, which is a journey that I am on here on YouTube, tracking my dividend portfolio every single week. That way, you guys can get a better picture of how to invest in dividends, how I'm investing in dividends, and get some tips and tricks along the way. So thank you very much for joining me for this episode. If you are new to Financial Friends, go ahead and hit that subscribe button. It is free, no cost, no expense ratio, no strings attached. So go ahead, hit that button. We're on the road to 1,000 friends here on the channel. Hit like if you like dividend content and if you enjoy these financial videos. And also comment your thoughts at any point. Let's go ahead and dive right into the video and answer the question of the day. Why SCHD? Why do I invest in it? Why is it a big part of our portfolio? Well, first things first, we have to go ahead and update our purchases. Now, the dividend tracker is having a little bit of trouble bringing in some ETFs and mutual funds. They have that noted up here. So that is affecting our current profit or loss all time. It is affecting this chart here. It was fixed this morning. Kind of had a little bit of an issue today, so I think they're still kind of working on some things, but nonetheless, we're going to update our SCHD position from 5.32 shares of SCHD to 5.515, and our average cost per share does increase a little bit as we have been seeing a bit of a bounce back in the market. Not so much today. You can see all those negatives back behind me, but either way, we went ahead and updated that. We broke the $32 annual income mark. Fantastic. So, the focus of today's video, SCHD. Why do we invest in it? Why is it the largest portion of our portfolio? Well, let's answer some of those questions. First things first, we are sitting at a holding breakdown with SCHD at 39.05%. Now, again, that is a little bit skewed, a little bit high because FISROX is currently not being included. It should put us at about roughly 35 or so percent SCHD. Now, the goal is around that number, and it's actually a 40% allocation to SCHD. So again, to recircle back to that question, why do we want that? Well, the first things first, SCHD tends to be a little bit less volatile than some of the other ETFs out there. If you see the decline in all of these over today, or you take a look at the decline or the rather bounce kind of here over the last 6 months, you can see that SCHD tends to be less affected by any type of volatility in the market. The low here, the high here, a little less high for SCHD. And then the lows here, not quite as low. SCHD actually 4.5% in the green versus the 1.55 or the 2.25% by VU or VTI. So again, we're not seeing quite as much volatility in the numbers here from SCHD, which is one of the goals of our dividend journey portfolio, is not to be super volatile. We're looking for income. We don't need insane growth, but we also don't want insane declines in the value of our portfolio, but we would rather keep a little bit more stability. SCHD provides that. But using these two comparables here, VOO or VTI, we could see that while we could just track the market and maybe get a little bit more upside on those upsides, we're not getting anywhere near the dividend yield that we are with SCHD. Here is VOO. We are getting a 1.63% dividend yield. Or VTI, we're getting a 1.57% dividend yield. Take a look at SCHD, just blows those two out of the water with a 3.9% dividend yield. And remember, while we do want less volatility, we also want high dividend yields. Again, we see that with SCHD. So we haven't even taken a look at the actual holdings within the ETF. We've only so far looked at the beta or the volatility of SCHD and its dividend. Both green check marks for all intensive purposes. Now, taking a look at the actual performance and holdings of SCHD, we're sitting pretty. Since inception, 14.04% annualized. Its 10-year being 13.49%. Its 5-year being 13.74%. And the list goes down. Now, of course, over the last year and year to date, it hasn't quite performed the same. But again, taking a look at these over the last year, VOO and VTI, they are down much much more than SCHD. So we're getting a better performing ETF within SCHD, at least over these kind of turbulent times. Now, taking a look at the actual holdings of SCHD, we can see here that they are holding some of the best companies for dividends. Companies like Coke, Texas Instrument, Home Depot, and Pepsi are among the top 5 positions within the portfolio. Now, we also get exposure to some companies that I otherwise would not invest in, or companies that I wouldn't seek an understanding of. Companies like ADP, Automatic Data Processing, companies like Pfizer or Broadcom or IBM. Even BlackRock is thrown in there. These are businesses that I've thought of making investments in before for their dividend yield, but just have never been able to actually understand the business enough to reach out and make that investment. Now, I think that you've kind of understood from all of that rambling. Well, yes, okay, invest in something that's low volatility, invest in something that's a high yield, invest in something with good performance, and maybe you don't understand these businesses, but why can you not seek out a business you do understand? Why even have individual investments within the portfolio? Well, first off, not seeking something out is because I am not a good predictor of the future. I recently made this post on Instagram. Go ahead and check that out. The goal of the stock market, or stock picking rather, is to predict the future. I understand I'm not going to be able to, so over 80% of my overall portfolio is in ETFs. Now, this is my, again, overall portfolio. This dividend journey portfolio is going to be roughly 50% ETFs, and I am going to make some individualized picks, but you could see here, when company X makes a $10 billion acquisition, you don't know if that's going to quadruple profitability or if it's going to make the company go bankrupt. You cannot predict the future, especially if you don't understand the business. That's why I'm not going out on a limb with Lockheed Martin or ADP, Verizon, or BlackRock. Instead, I'm getting indirect exposure through SCHD, which I know has a good dividend yield, good performance, a history of good performance, and lower volatility. I can instead invest in the US dividend equity ETF, right, and get this exposure to these businesses I don't know. And the businesses that I do know, that I do understand, and I'm comfortable with making investments in, I have individualized investments and bets on those companies within the portfolio. Apple, John Deere, Hershey, 3M, Procter & Gamble, Waste Management, Realty Income, J&J. These are companies we've discussed and talked about here on the channel before, and if I can wrap my head around it, if I can fit it within my circle of competence, I can make an individualized investment within it. But I am not banking on the majority of these playing out. Instead, I'm getting 50% of my portfolio within ETFs, FISROCs, and SCHD, banking, of course, much more heavily on SCHD for that larger dividend, and I am letting it ride. Buy and hold. I'm not selling. I'm not trading in and out. I am building good, solid positions in companies or ETFs that I can understand. So I hope this answered some of your questions. SCHD will be continually talked about on this channel moving forward. It is my favorite position here in the portfolio. It will be the largest position here in the portfolio, and none of this is specific investment advice. Please always do your own research, but this is my research on why I enjoy having SCHD be the largest position in the portfolio. So go ahead and leave a like on this video. I know SCHD has a cult following. If you like SCHD, comment down below why you like it and why you hold it, and maybe what your return is so far since investing in it. Thank you very much for watching this video, and I hope you all have a great day. Take care.